Have a good day to all my students. Then AAT Institute invite me to do some awareness session on how tax changes impact to the uh, upcoming examination of August 2023. So with this video, I'm trying to do what are the most focused area you need to concern in coming examination. Not only that, what are the changes happen after 1st October 2022 and the 1st January 2023, and how those changes are impact to your examination. Right at the end of the discussion, I will do a one individual tax calculation questions for your betterment, so you can understand how you can do that the individual taxation with the amendments after 1st January 2023 in your examination. So hope you will get the maximum benefit out of this session, and please try to focus what I am highlighting during this discussion to get the best result in your examination, right? I will discuss in detail with my presentation, so you can see that, right? Okay. So my dear student, I will share my prepared document, that means the presentation for your betterment, right? So now you can see. Then I will discuss first of all what is the paper structure of the AAT level 3 taxation. Level 3 taxation. So then here I will discuss what would be the paper structure. In your paper, you can see there are 3 sections. Section A, then section B, and then section 3. Then I will discuss section C. Then I will discuss how much the allocated marks, and how many marks, right? And how many marks for each and every sections, right? In section A, there are 20 marks allocated for 4 questions. That means 5 marks per each question, right? So section B, there are 3 questions. So 30 marks allocated for section B, 10 marks per each question. This is the most important section in your examination paper. Section C, there are 2 questions, each question 25 marks, and then here 50 marks allocated for section C. So when we discuss this section C, there are 2 questions, question number 8 and question number 9, 25 marks per each. Then here company tax. Then in this case, individual taxation. Individual taxation, right? Under this section C, there are 3 questions. The partnership tax will be there. Partnership tax. Then SWAT and VAT question definitely may be there. And then as a past trend, tax administration. Under the tax administration, you know what are the due dates of the quarterly payment, what are the due date of the return submission and assessment, appealing methods, and penalties. Under this, there are 4 questions. Definitely there will be a residence status. Then here case law, then tourism development levy, or share transaction levy, or stamp duty, and there is a new tax introduced, SSCL, that means Social Security Contribution Levy. Regarding the SSCL, what you need to keep in mind, the SSCL rate is 2.5%. Then you need to know to whom this SSCL is applicable. So I will discuss that during this discussion, right? So the section A further, there may be some possibility to the stamp duty we have already discussed under that, under here. So here there may be possibility of the capital gain. This capital gain may be tested in either section A for 5 marks or section B for 10 marks. So if the capital gain test as section B, then the tax admin come to the section A, right? So this is the paper structure. So that's for your understanding. So then I will discuss the individual taxation. Under that individual taxation, then I will discuss the very important part, the time period differences due to the tax changes after 1st October 2022 and 1st January 2023. Then most of the students having a problem in these days, whether they have to do their calculation for individual, that means our year of assessment, 1st April 2022 and 31st March 2023. So this is the our year of assessment. So most of the changes arise after 1st January 2023. So some of the lecturers institute teach as you need to do 2 calculation. That means 9 months by using the old tax rules and 3 months by using the new tax rules. Regarding that, no need to do that. You can consider this as an 12 months, right? 12 months, but that 12 months you need to consider as this tax changes after 1st January 2023 effective from 1st April 2022. That means in practically, when you are calculating this individual or company taxation, it is better to use this 9 months and 3 months or 6 months and 6 months for a company. But for your easiness, for your betterment, the institute has taken a decision to consider this 12 months as all the relevant tax changes are applicable. So already they have shared a message to all the institute and head of the AECs, right, and the lecturers. Then here they have mentioned, you please look at the red color highlighted one. The year of assessment test will be 2022 and 2023. That's okay. That's we know, right? Then even though more changes are effective from 1st January 2023 for an individual, right? The most changes after 1st October 2022 for a company, those changes are applying for a whole year, irrespective of the time period, considering the convenience of the students. That's why, right? This is not the message that I created, right? This is the copy of the message that AAT Institute shared with us, right? So now you can understand, no need to divide your taxable period into 9 period and 3 months period for an individual law, 6 month and 6 month period for a company. You can consider that as an whole year as 12 months, but you have to apply all the tax changes after 1st October 2022 and 1st January 2022. No need to worry about the previous applicable tax rules. So I will discuss what are the basic changes, right? The basic changes that apply for your examination with this summary discussion. So the test in Social Security Contribution Levy under the other business taxes at the July 2023. That means July 2023 examination mean August examination. So, right, that's about the time differences. Then after 1st January 2023, they have introduced, they mean the Inland Revenue Department, the government introduced withholding taxes which were abolished earlier, or AIT. The both are same, don't worry, right? Conceptually, both are same, right? Withholding tax, so advance income tax. Here, not APIT, right? Here, AIT, not APIT, right? So there is a change in the vehicle benefit, the housing benefit, and the qualifying payment and relief for a individual and tax rate. So here, first of all, I will discuss the individual taxation, then I will move into the company taxation. So already we have discussed that. So here individual taxations, you can see these are the withholding tax applicable for a investment income and other income, right? So here don't worry, even though I have mentioned so many withholding tax here, just you can get an idea about this, right? So I will write down it in summary form. You know, under the investment income, there are some investment income we will discuss. Then we have already discussed because in your classes and the self-study or in whatever the way. However, there are basically 3 types of income we need to discuss under that investment income. Basically for here, I will only take the 3. So first one, interest income, then rent income, then dividend income. Dividend income. So you know there is another income, the gain from the realization of the investment asset or else the capital gain. So I will not take that income under this to discuss. Withholding tax. I will take these, the interest, dividend, and the rent income. So I will discuss one by one. So first of all, I will discuss interest. So in your exam, the examiner will give interest on FD and the interest on foreign currency business unit. You know the foreign, if there is an interest in the foreign currency, that will not be taxable because that is exempted. So I will not discuss that part much because you know already. Here I will only discuss the part which are changes after 1st January 2023 and the 1st October 2022, because I will not discuss whole syllabus here, right? The changes and how we can apply these changes to the upcoming examination, right? So on interest, you need to pay withholding tax on 5%, both company and the individual, 5% interest. So in examination, the examiner will give this interest as like this, right? So sometime, let's say you have received the adjustment like that, gross FD interest, 100,000, and then additional information, relevant withholding tax has deducted. Withholding tax deducted. Here the gross can be given, no, it may not be given, right? So gross whether available or not, if it is available, you have to think that as an gross. If it is not available, the wording of the gross, at that time also you need to think that as an gross. So here what you need to do, then this 100,000 you need to add under the investment income, and you have already paid The relevant withholding tax means 5%. You have to keep in mind that the 5% here I will explain the interest on 5%, resident person to rent resident person 10%, and here dividend 15%. That dividend is a final tax. So I will let you know what is the meaning of the final tax later, right? Don't worry about that now. So then the relevant withholding tax are deducted mean 100,000 into 5%. They have already deducted and you only received in this case 95,000, here 5,000. This 5,000 you have to take that as an withholding on interest as tax credit. When you calculate the balance tax payable by deducting available tax credit from your gross tax liability, this 5,000 you can deduct that as a tax credit. However, keep in mind regarding the interest under the investment income, it should be add as an gross, right? Without then in the examination, the examiner will give this test. I mean, will check this like, right? The net interest. Sometimes they will give as net interest 95,000. They have nothing given about the withholding tax deducted or not, right? Sometimes may give. Or net mean the meaning of the net here after deducting relevant withholding tax. That means you received this 95,000 after deducting withholding tax. That means here gross interest, you know, if the gross interest is 100, the relevant withholding tax, you know, the 5%, right? So then you can get the 95 rupees. That is net interest. Now you know the gross, and the difference between the gross and net is the withholding tax. So now you have received the net 95,000. Then you need to find the gross. How you can find that? 95,000 divided by 95 and multiplied by 100. So here you can see here gross interest is 100. Then the withholding tax is 5%. So this gross interest 100,000, you need to add it to the investment income, and this paid withholding tax, you can deduct that as a tax credit under the individual tax calculation, right? Tax calculation. That's how you can adjust this interest with WHT, because the WHT is WHT was not there in the previous time examination. They have implemented this the withholding tax adjustment after 1st January 2023, but you have to concern that was applicable from 1st April 2022 for your easiness, right? Because the AAT Institute has given a notice for all the educational centers and the lecturers. Hope you have already aware about that. That means what I have discussed and the time differences, that mean here, can you remember? So this is the message that the institute has passed to us, right? Okay. That's the application of the withholding tax and how we can do that adjustment under the investment income with interest, right? So interest with withholding tax. So then I will move into the rent. So regarding the rent, I told you the relevant withholding tax rate is 10% for a resident. Don't worry about the non-resident. Non-resident for it should be 14%, but this non-resident, the non-resident will not test in your time, right? Because that is not non-resident taxation is not under your syllabus. So only resident taxation. So this 10% you have to pay on that rent. But the thing is, if your rent, monthly rent. It should be monthly rent. If your monthly rent, more than 100,000, then only they will charge 10%. If you are 100, increase the 100,000, then only. Let's say for an example, you are the gross rent per month is 150,000. Then you may think, then this up to 100,000 that is exempted. Don't think like that, because the withholding tax only can apply if your rent income, monthly rent income exceed the 100,000. But that 10%, if the rent income is exceed 100,000 per month, that 10% need to apply for all total income, not the amount that exceed. That means in this case, not on 10% on 50,000. It should be charged on 150,000, and then you can get a 15,000. So don't think then you have to apply withholding tax the excess amount after 100,000. So that is not the application. So then if your monthly rent is more than 100,000, you have to apply 10% withholding tax on that total rent income. So up to 100,000, the withholding tax is not applicable for a resident individual. So in this case also, same as this interest, for an investment, as an investment income, you have to take gross interest. The paid withholding tax you can take as tax credit. So this investment income. So keep in mind, the very important, this deducted withholding tax, under here you can take that as a tax credit. If the examiner given this rent as a net rent, that means after deducting withholding tax, what you need to do is, you need to convert that net rent, here not interest, right? The net rent into the gross rent by the way that following, how we convert net interest into gross interest here, right? Where we cannot divide by 95, because the application of the withholding tax for this gross rental is 10%. So if the gross rental is 100, the relevant withholding tax should be 10%, then your net rent will be 90. So you have to keep in mind this, the withholding tax. If the net rent is 90, my dear student, let's say you have received 90,000 as an, 190,000. So it should be 180,000. 180,000 as an net rent. So what you need to do, how you can convert here, then 180 divided by 90 and multiplied by 100, then you can take that as an 200,000. This 20,000 is the withholding tax application. So this should be taken that as an tax credit. The gross rent you have to add it to the investment income. So always you need to get the gross rent, right? If the examiner given the gross rent, no need to convert to anything. You can just add it as an investment income. If they have given some information about the withholding tax deductions, if the withholding tax already deducted, that the deducted withholding tax you can take as a tax credit. So that's how you can adjust to the the rent and interest when calculating the individual and the company both, right? In this case, applicable not only for the company, not only for the individual, both company and individual. Right, then the dividend. So regarding the dividend, you know, the applicable withholding tax rate is 15%. That is a final tax. Please keep in mind that is a final tax. The final tax means the any withholding tax which considered as a final tax, that dividend subject to the final withholding tax, right, should not be again taken to the calculation of investment income. That means simply if you received any dividend after deducting withholding tax, that means net dividend. This net dividend again, don't consider, right? Don't consider as an investment income. Under that investment income, what you need to write down is the dividend. In front of that, you need to write down what? Not exempt, actually, there is a final tax. The final tax means examine, that dividend received after applying withholding tax. So that is a final tax. If such withholding tax is a final tax, that deducted withholding tax, like the previous interest and rent, you cannot consider as a tax credit. You can't consider as tax credit. This only applicable for final tax. Your level, the only applicable final withholding tax is what? The withholding tax on the dividend. So if the dividend is given as gross, and if they nothing telling about they have deducted, that means that dividend received without subject to the withholding tax, then you have to check very carefully whether that dividend received from out of the dividend from another company, right? That means simply that is exemption rule. So I will not going to discuss that exemption rule here. So you know what are the income what are the dividend income exempted, right? So for the taxation, I will not go into that because that is not a changes after the new tax implemented, right? So then here I will only discuss that the new things. So this how apply the dividend interest and the tax calculation, right? Dividend interest and rent. So then I will discuss then changes to the individual taxation, that mean under the vehicle benefit. So vehicle benefit mean a non-cash benefit. Now you know, right? There's a non-cash benefit. The previous tax rule was, then can you remember, we have to evaluate the engine capacity of the vehicle, and then we have to decide the monthly benefit. Now there is no such engine capacity requirement. Any level of the capacity, monthly benefit of that vehicle is 20,000. Monthly benefit if the provide driver is 10,000. If provide fuel is 20,000. So let's say then vehicle and driver, that should be monthly benefit 30,000. The vehicle, driver and fuel all together 50,000. Only vehicle and fuel, it should be 40,000 per month. Then per month benefit, you need to multiply it by number of months which that benefit received to that year of that individual, right? That individual. That's how you can adjust this, the vehicle benefit. So regarding the housing benefit also, I will quickly go through these things because those are not a much hard concept to understand, right? So housing benefit, previously, if you can remember, the previous tax rule was what you need to do is the housing benefit. You need to get that housing benefit after evaluating your monthly remuneration. Now there is no such a requirement of calculation of that individual's monthly remunerations. No need to that, right? Just you can check whether that the provided house is located at the rated area or unrated area or state bungalow. If the house is located in the rated area, what should be the monthly benefit? Here monthly benefit 12.5% of the monthly relevant month salary. If the unrated area, 10% of the salary of the relevant months. Then the state bungalow, 7.5% of the salary of the relevant month. Then you have to consider that monthly salary, and no need to check whether that the monthly salary is more than 200,000 or less than that. No need that requirement after 1st January 2023. So that tax rule you need to apply for whole year of assessment 2022 and 2023. So in the situation of the company is not provide house and the company reimburse the rent expense of the employee. So at that time that the reimbursed value should be taken that as an income. So sometime company directly pay the employees monthly rent to the outside party. At that time, you have to take that the actual paid rent by the company as an benefit of the individual, that means the employment income calculation. Right. So then I will discuss what are the available qualifying payment and relief after tax changes. So these are the only available qualifying payment, right, for a individual tax calculation at your level, right? At your level, right? So personal tax relief now not 3 million, furthermore 3 million, right? That's reduced to 1.2 million. 1.2 million per year of assessment. So my dear students, please keep in mind. So this no need to calculate this 30 million divided by 12 and first 9 months this value plus 1.2 million divided by 12 and apply 3. No need to calculate this fraction or the proportionate applications. Just you can deduct 1.2 million for the year of assessment 2022 and 2023. So your personal tax relief is 1.2 million. At the same time, then I will tell you something about the APIT. I forget to tell, right? Then otherwise I will forget to tell that APIT, the only application of this APIT is what you need to know, that APIT will charge any employment income over 100,000 per month. So no need to get the consent to deduct this APIT. The APIT will hold by the employer, right? Employer and employer. And this what employee, that means the individual, need to do is when calculating individual taxation, this paid APIT, you can deduct that as a tax credit. That is the only application. No, at your examination. So no need to know about the way of the calculation APIT and what are the tables available. But for the further update, that means when you are doing the practice, right, in your company, it is better to use this APIT table. What are the table, how they calculate this APIT, and all you can get that knowledge by downloading all the tables and reading the description under the Inland Revenue Department website, right? So that's what about the APIT. So the second qualifying payment and relief is 25% gross rental on the allowance, rental allowance, right? If you have any rent income, gross rent income, if your actual maintained cost is lower than 25% gross rental allowance. At that time, you can take that 25% gross rental allowance as a qualifying payment under the section 52, right? But keep in mind, you can't take the 25% gross rental allowance plus actual maintenance cost same time. You have to get the higher balance. If the higher one is 25% gross rental, you can take that as an qualifying payment time relief. And if the highest one is the actual maintenance cost, at that time you can deduct that the actual maintenance repair cost under the rent income in investment income. So other one is the foreign service income earned by individual or partnership in a partner in the partnership in foreign currency, that the total income is exempted. Then other available qualifying payment is what? The donation. So donation can made to two party. First one is donation to approved charity. If the donation is approved charity, please keep in mind, form of goods or equipment donations are not allowed. It will not allow to deduct. So cash donations are allowed under the below restrictions. That means what is the restrictions? The value should be determined the lower value of actual cash donation, highlight cash, otherwise we will not allow actual cash donation. Then maximum amount is 75,000 per year of assessment and 1/3 of the taxable income. So you have to evaluate these two amounts and you have to get the lower value. You have to get the lower value. So that's about the donation to cash donation to approved charity. Good donation, no need to worry about, that is not allowed. So the donation can be made to any government institute like the university, school, hospital, and other the provincial councils, right? Then the divisional secretaries or any established fund by the government or sub political parties like the divisional secretary or provincial council. Then Sarana fund, Nafi fund, COVID-19 fund, then the national kidney funds. So if you made some donation to any of these institute in cash or in way of the goods, both allow without any restrictions, right? So this this qualifying payment and relief is applicable for your company as well. At that time I will discuss it again, right? When I am discussing the the company tax. So this about the qualifying payment and relief. So when we discuss the tax, individual tax rates, so normally tax will apply on your taxable income. So you have to be very careful, evaluate what are the income, including this taxable income. You have to see, is there any capital gain include this taxable income? If there is any capital gain include, that capital gain you need to tax at 10%. Then you need to evaluate, is there any terminal benefit? So this terminal benefit most probably 95% or 99% will not test in your time, because there is something not something which is not test in the previous examination as well. So the terminal benefit, if there is a terminal benefit, that means the pension, regarding the pension, you know, the government pension is exempted. So other pension received or any gratuity received or any other provident fund which is not approved that received, that the terminal benefit should be taxed at first 10 million, 0%, next 10 million, 6%, on balance terminal income should be 12%. So don't worry about this terminal income, right? But you have to be very careful about the capital gain if there is capital gain. So then you have to check whether is there any gain from liquor, tobacco, betting and gambling. So this also will not test, but you have to take that. If such gain is included in the taxable income, you have to get that as a separate income and you need to tax at 40%, right? Is there any income other than capital gain, terminal benefit or gain from the liquor, tobacco, betting and gambling? That should be considered as a residual taxable income. This this residual taxable income need to tax like this. Most probably in your exam, this is the tax rate you need to apply. So I will highlight here, right? So what is that? So first 500,000, don't check the suggested answers in the previous years, right? It will 600,000 because that is according to the tax rule applicable at that time. But now you have to apply the first 500,000 6%, then next 500,000 here in 1,000 rupees in 1,000, 500,000 in 12, the next 500,000 18. So the next 500,000 24. So the next 500,000 30. Then altogether you can take 2.5 million, right? 2.5 million. If there is any balance residual income, so the balance income you need to tax at 36 point. So this is the way that you can calculate your individual tax, gross tax liability. So I will do this with some example, then you can see that, right? So then I am focused on company taxation, right? It is better to the focus on the company taxation after completing. There is a question then I have already prepared for individual tax calculation. Please read once to get and understand. If you want, please take a photo or screenshot for your reference. Then I will explain it once. Please take 2 minutes and read the fiction. All right. Then please read that questions. Right. Mrs. Dasuni is a manager, works at a reputed financial institute. The following information provided for the year of assessment 2022 and 2020. They are here after that use as year. Right. So monthly gross salary given, the entertainment allowances, 10,000 monthly telephone bill allowance, right? So I will do the calculation with you, right? So you can see that, right? I'm doing that, the calculation here. Right here, just you can, Mrs. Dasuni, calculation of tax liability for the year of assessment 2022 and 2023. Let's say rupees in thousand, right? So if you want, you can do that rupees without in thousand, right? So here, then once you read, you can understand what are the available income. Then first of all, in your exam, you have to read the question. The employment income was there. Then I can remember the business income also there. Business income and investment investment income investment income. And then you can see the total of these values. We have to take that as and what? Total assessable income. Total assessable income. Total assessable income, right? The once you get the total assessable income, you can deduct the section 52 deductions, right? So under that section 52, you can deduct the qualifying payment and relief. Qualifying payment and relief. So then let's see what are the available qualifying payment and relief for a individual. Right. So let's see later, right? So now you know already what are the qualifying payment and relief, right? So after that, after deducting these, the qualifying payment from the assessable income, you can take what? Taxable income. Total taxable income. Yeah. Once you calculate the taxable income, you can take the gross tax liability. Gross tax liability. From that gross tax liability, you can deduct the tax credit. So what are the available tax credit? We'll see, right? Then when we are doing the calculations, so then you can take what? Balance tax payable. To calculate this employment income, you need to do separate working. I will refer that as a note 1, note 2, and note 3. So here, the note 1, employment income. Under that employment income, we have to see what are the available income. So note 2, business income. And note 3, so you can do these things with me after pausing the recording, right? This is the recorded session. So then investment income. So let's start with the employment income. Now you can see, my dear students, the monthly gross rent is given as 400,000. So here, gross salary, you have to take that as a gross salary, keep in mind. Gross salary per month 400,000 into 12. So that is 4.8 million rupees in thousand, right? All the rupees in thousand, you can understand. So here, then entertainment allowance 10,000 month. Entertainment allowance 10,000 per month into 12, that is 120. Because here 12 mean they have nothing given with the benefit received from specific period. So we have to assume that as all year they have received this benefit. So when we take the telephone bill allowance, this telephone bill allowance means the most of the students are doing this mistake. So this is not a telephone bill reimbursement or payment. If the telephone bill reimbursement or payment, that should be take 50% out of that benefit. But here the telephone bill allowance means that is cash benefit. That is a cashable one, right? So the total 200,000 you have to take. Though if that the telephone bill payment or telephone bill reimbursement such a non-cash benefit, so you are supposed to get out of 50, right? So here, please keep in mind that that is very important. Telephone bill allowance. So that is given for year of assessment. So nothing given with a month or not. Then at that time we have to think that whole year. So you have to get that 200,000. Don't multiply by 12 or whatever the period. Then cost of the living per month is 5,000. That should be taken as a part of employment income. Cost of living. 5,000 into 12. That means 60. That means 60. And then she lives in the rented house by paying 60,000 per month and company reimbursed by 50,000 per month. So I told you, when the company is reimbursed such a rent income, that the benefit should be the reimbursed value, not the paid value by the employee. Here, the employer reimbursed 50,000 per month, so that the housing rent, so 50 into 12, not 60. Don't misunderstand, right? It's the reimbursed value. So it's 600,000. 600,000. And then company provided the vehicle with driver. You know that for vehicle per month 20,000, driver 10,000. So monthly benefit is 30,000 per month, right? Personal use 13 to 12, right? So here vehicle benefit 20 per month for vehicle, 10 per month, 10,000 per month for driver into 12. So here 360. 360. So we have to check, is there any other income during the year? She had a surgery and total the bill was, here should be bill, right? Total bill was 400,000 and company has reimbursed the total bill. Reimbursed. The company is not follow an equal policy for all the employees regarding the medical bill reimbursement. My dear student, at that time, if the company is not follow equal policy, common policy, at that time that the reimbursed medical bill you have to take as an employment income. If the company is follow an equal policy for all the employee regarding the medical bill reimbursement, but at that time that the reimbursed medical bill should not be included, that means excluded from the employment income. But in this case, they have specifically given the company is not follow equal policy, therefore medical bill reimbursement we have to take as an part of the employment income. Medical bill reimbursement. So how much? You know that is 400,000. So then the last point of the employment income, APIT paid for the year is 110,000. What you need to do, my dear students? That 100,000 you can take as tax credit. APIT paid. So that is 110 rupees in 1,000. So that's all about the employment income. Then now you can get the assessable income from the employment, 4,800 plus 120 plus 200 plus 60 plus 600 plus 360 plus 400. Then mean 6,540 rupees in thousand, otherwise 6,540,000. So this is the assessable employment income. $6,540. So then we can go to the business income calculation. Here you have to start with profit before tax. So how much the given profit before tax? Here you can see. So here we have with the profit before tax, right? Net profit. So how much? 5 million minus 1,500 minus 500 minus 50. 2,950,000. 2,950,000. So in rupees in thousand, 2,950,000. When you calculate this 2,950,000, what you have deducted staff salary. So staff salary normally incurred to production of the business income. Therefore, that is allowed as per section 11. Right, section 11. Then the depreciation. Oh, depreciation never allowed. Depreciation never allowed as per section 16. The depreciation you have to add back how much? Instead of that, you can get the capital allowances if they given the information. Capital allowance. We'll see, right? If the capital allowance is available. So there was, right? So depreciation 500,000 and the capital allowance is given is 50,000 per year of assessment. So depreciation you have to add back, and the capital allowance you can take that as an deduction. So there is a penalties. So there is a penalties. So penalties is there. So that penalty paid for what? The penalty pay has paid for the delay payment of the business registration payment to provincial council. You know, under section 10, any penalty payment which due to the breach of the written law is not allowed. So how much the penalty payment here? So that is not incurred for the production of the business income. Therefore, that 50 you need to add back. So that's all about the business income. So here 50. So 3,500 minus 50 mean 3,450 is the assessable business income. So 3,450. 3,450. So then we can move into the calculation of the investment income. Here they have given the information. The following interest income received during the year, the fixed deposit, that is net FD. Under that interest, FD interest, you receive the net. So 38 is the net. Now you know net mean after deducting 5% withholding tax. That means this will equal to 95. You need to get the gross. Then you need to multiply 100. So it will be 400,000. Then how much the relevant withholding tax that you have already paid? 400,000 into 5%. That is 20. So that should be taken as tax credit. The withholding tax on interest, how much? This 200,000 into, sorry, 400,000 into 5%. So here you can take that as an 20. $400,000 into 5%. So other one is Interest in foreign currency on RFCBU accounts, USD 1,500. Now you know the any interest received in the foreign currency accounts in a way of foreign currency, that is exempted. Right? Interest on RFCBU account. So that is what you need to do. That is exempt. Exempt. So you have to write down it. That is 400. Net interest. The total interest on the taxable is 400. Further, 500 net dividend. Net dividend after deducting withholding tax received. That means you know the withholding tax on the dividend is the final withholding tax. Any dividend income subject to the final withholding tax is should not be taken as investment income again. So dividend income, what you need to write down here is a final tax. Final tax. So on that, no need to, that means you are not eligible to get the tax credit on that paid withholding tax on that dividend as well. So she has an inherited house in gold. That means rent income. So under that rent income, so how much the value of the monthly rent is 150,000. Rate in assessment is 300,000 and rate paid by the tenant. Tenant means the company, not the dasuni. So 30% the company paid rent after deducting withholding tax, then mean that is subject to the withholding tax. However, they have given the gross monthly rent is 100,000. So first you need to get the gross rental. 150 into 12, how much? 1,800. So then you can deduct if there is in rates paid. So in this case, there is no rates paid by, not allow. What the reason? The rates paid by tenant. If the rates paid by dasuni, then you have to get the rates 300,000 into the 30%. But in this case, tenant means the company. If the company is the party who paid the rates, you cannot deduct that as 1,800. In this case, there is no actual repair expenses, but you know, as an individual, you can take some qualifying payment under that 25% allowance on gross rent. So how much? So gross rent is 1,800 into 25% mean 1,800 into 25% mean, my dear student, you can take 450 as an qualifying payment in this case. Right. So what are the other available informations? So we already completed that. And not only that, the company paid rent after deducting relevant withholding tax. That means then as a dasuni, as an individual, he paid withholding tax on this rental. Why? Because you know the rental withholding tax on rental only can apply if your monthly rental is more than 100,000. So here 150,000 monthly rent. So you can pay that withholding tax. So withholding tax on rent is how much? 1,800 into 10%. So 180. So then she donated 500 worth of goods to the village temple. Village temple is not an approved charity. So under donation, qualifying payment, village temple, not allowed. So then there is a donation of 100,000 books to the government school. Right? Government school, you know, there is an government institute. So there is no restriction, either cash or mod in the goods. So that is allowed without any restriction. There is self-assessment payment, that is 400,000. That means installment payment. That installment payment should be taken as what? So I had a mistake when I write down the donations here, right? Donations. The donation should be recorded not under the tax credits. I had a mistake right here. So the donation first, village temple, not allowed. So government school, allow 100. Then self-assessment, 400, there is installment payment. So the everything we have considered, then now you can calculate the total investment income, 2,200. So here, accessible investment income, 2,200. That 2,200 you have to add as an accessible income here. So altogether you can take the total accessible income 2,200 plus 3,450 plus 6,540. So altogether 12,190. From that you can deduct, even though given or not, so 1.2 million personal tax relief. Personal tax relief. Right. 1,200 plus 100 plus 450. 1,750. Then total you can take 10,440. So this is the taxable income. So on this taxable income, you have to evaluate, is there any capital gain include? Likewise, then I will do some work in on this 10,440 to calculate work in one. The taxable income, 10,440. So this, you have to check whether is there any capital gain on this. There was no. If there is capital gain, it should be included in the investment. So there was no any capital gain. Is there any terminal benefit? No such benefit is there. Is there any gain from the liquor, tobacco, betting and gambling including this taxable income? Including this taxable income. There was no such gain from the liquor, tobacco, betting and gambling on this taxable income. So this total taxable income 10,440 we can consider as a residual taxable income. So residual taxable income, you know how you can calculate tax on that. You know, first 500 into 6%, the next 500 into 12%, next 500 into 18%, next 500 into 24%, next 500 into 30%. Up to 2.5 million you can calculate like this. Then need to get the balance taxable income after 2.5 million. So 10,440. Then 10,440, then 2,500 already we considered. Then 7,940 is the balance residual income. So it should be taxed at 36%. 36%. So it should be 2,858,400. So now you can see in these things here 30, 60, 90, 120, 150. So you have to add all together. So here you can see 3,308,400. That is the total tax liability. Right. Here you can see 10,000. Then we are in the, then here total taxable income was 10,440. Then based on that taxable income, we calculated the relevant So then you can see your gross tax liability will be 3,308,400. Liability 3,308,400. So then you have to get the total available tax credit. So how much the available tax credit, you can see it is 710. So this 710 tax credit you have to deduct from your gross tax liability 3,308,400. Then your balance tax payable will be 2,598,400. This how you can apply individual tax calculation, right? So now you have understand the way of calculate individual taxation. So my dear students, then I have already discussed this question with you. So my dear students, then I have already discussed this question with you. So then I will discuss the most focus area on the company taxation. Here under that, qualifying payment and relief applicable for a company, and the section 12 and 18 you have to focus, and section 16, then tax rate. So under the qualifying payment and relief applicable for the company, what you need to know is, if that qualifying payment, that means the donation to approved charity, the form of the good donations are not allowed, but the cash donations are allowed under the below restrictions. Can you remember when we discussed the individual taxation? It was the lower value of actual cash donation, or maximum 500,000, or 1/5 of the taxable income. Now in this time, then here there are two difference. The maximum amount the previously was 75,000, now 500,000. The previously it was 1/3 of the taxable, now 1/5 of the taxable. So these are the changes that mean in between the individuals and the company. These are not any, there is no any difference that will change after 1st January or 1st October. So for regarding the here this should be the company, right? Yeah, this should be the company. right? Under that company, the donation to any of the following institute, that means any government institute or any established fund by the government or Sarna Fund, Apivinafi Fund, the COVID-19 Fund, the National Kidney Fund, any of these funds, that means this is very similar to the individual taxation, right? Any of these fund, that means any of these institute, you can deduct without any restrictions. You can deduct without any restrictions, right? So then the section 12 regarding the interest expense, regarding the interest expense, regarding the interest expense, you have to apply section 12 and 18 together. Section 12 highlight that the nature of the nature of the interest that are allowed for the tax purpose. That means if the borrowed money which was used for the acquired asset, and during that period, if that asset employed for the production of income, that interest is allowable, and then the debt obligation was incurred in the production of the income, that the interest on that debt obligation is allowed. So thereafter, you have to apply the section 18. So section 18 will decide how much the maximum allowable finance cost. There is a formula. In the previous time, it was manufacturing 3 for manufacturing, 4 for others. Now there is no such 3 and 4 classifications. All the companies, this is the way you can deduct calculate the maximum allowable finance cost. So how the finance cost of the year allow under the section 12 divided by debt obligation. Then you need to multiply 4 into equity. 4 into equity. Equity mean other than revaluation reserve. The here 4 mean that is absolute. It's always 4, right? Absolute. So this rule is not applicable for the financial institution. Keep in mind, financial institution, and any unutilized interest, unrecovered interest, disallowing. If there is a disallowed interest, that disallowed part you can carry it forward for next 6 years. So here, how you identify the disallowed finance cost? Then let's say under the finance cost of the section 12, it's allowed 5,000. Under this maximum calculation, according to this formula, you got only 4 million. Then you have already deducted 5 million, even though there is allowed 4 million. So 1 million disallowable finance cost, that 1 million disallowable finance cost, you have to add back to the, you need to add back to the business income calculation. That is the application of company taxation under the section 12 and 18. So then I have explained here the what are the capital allowances after any asset acquired after 1st April 2018. So I will let you know in a easy method. So please keep in mind. Then here, this is the way that the act is explained that. So, but the problem is that is not easy to keep in mind. That is not easy to keep in mind. So I will give you a small way to keep in mind it, right? The correct, the easy way to. First one, any asset acquired after 1st of April 2018, So if that is a building, it should be number of years or percentage. So now you know way of calculate the, convert the number of years into percentage, right? The building 20 years. Then how you can convert the 100 divided by 20? So it is 5%. And then is there any milking machinery? Milking machinery, there is 2 years, that means 50%. Intangible, other than goodwill. Other than goodwill, intangible other than goodwill, if you know extract or definite, useful life, use that. If not, here 20 years, 5%. And then all other asset mean vehicle, computer, office equipment, furniture. Here 5 years, 20%. Right. So when you calculate any asset disposal, which business asset disposal, this is the way you can dispose. So here keep in mind, when you take the capital allowances, the year which asset acquired, you have to get capital allowances full year without considering the date of the purchase. When you dispose asset, please keep in mind the year of assessment which that asset disposed, you are not eligible to get the capital allowances. Regarding the trade debtor write-off, any write-off, if there is an actual write-off, that is allowed. But if such person has taken a reasonable step, then only reasonable step to recover, and the person reasonably believe that recoverable is not possible, then only you can allow. Then simply actual bad debts or the write-off, bad debt trade debtor write-off allowed. But in any case of special provision or general provision on the trade debtor, you are not allowed to deduct that as an expense. So when we discuss the company tax rate, then you have to check, is there any income in taxable income? Is there any gain from liquor, tobacco, and betting and gambling, including your taxable income? That should be taxed at 40%. Liquor, if there is any gain from liquor, tobacco, betting and gambling. So all other income you need to tax at 40%. Balance taxable income. So the previously there was a different tax rate like the 18%, 14%, and 24%. Such tax rates are not allowed. That means the export 14, then medical, the medical medicine, medical report, the medical company. That means the for an example, the pharmaceutical item and all 14%, then educational 14%, the agro-processing SME and all, right? There is no such classification now. All the companies should be taxed at 30% other than the gain from the liquor, tobacco, and betting and gambling. That's all about the company tax rate. So this is the way of calculating your capital gain and tax rate. So now you know way of calculate the capital gain. That means the gain from the disposal of or realization of the investment asset. Then in here, what I need to highlight, if that investment asset purchased before 30th September 2017, you have to take market value as at 30th September 2017 instead of the expenditure incurred for the actual. If any asset after purchase 1st 30th September 2017, you can take expenditure that the acquired cost as part of the cost. And then the capital gain tax should be calculated based on these rates, right? For a company, that is 30%. For all other individual, including the individual, it is 10%. So there are some capital gain exemptions. Then I just mentioned these things for your revise your the memory, right? So you can memorize what you have learned so far. So gain from the realization of the product shares, you know, the listed in the Colombo Stock Exchange, those capital gain is exempted, right? So you can know other exempted areas, right? 550,000. If does not exceed the 50,000, any gain from realization of investment asset or aggregate value for a year is not exceed 600,000. Right? And also gain from the realization of the principal place of the residence, if the following two criteria meet, both should be met. This only applicable for a individual. So it has been owned by the individual continuously for 3 years. During that 3 years, at least that particular individual need to reside in, live in that house at least 2 years. No need to continuously. That is calculated daily basis. But the ownership should be continuously 3 years. So what are the changes to VAT? Here the thing is, what you need to know is the VAT rate change now 8% to 15%. That's all, right? There is no such, there is one other difference. That means what? Registration threshold. The registration threshold. You know, the registration threshold, it was per quarter 75 million. And for year 300 million. But now per quarter it has 20 million, and per annum it should be more than 80 million. That is the different threshold, registration threshold. Then regarding the SSCL, what you need to keep in mind is the SSCL 2.5% is the rate. I have already explained it, right? When we discuss the structure of the paper. And SSCL is payable by the below persons, any importer, any manufacturer, any service provider, and wholesaler and retailer. Right? So they have to pay their SSCL payment on their relevant income. Right? From this short video, I am trying to discuss what are the changes due to the new tax rules issued by the government after 1st January 2023 and 1st October 2022. So regarding the individuals and the company, I have discussed what are the changes impact to the individual taxation and how can do that changes applying with some practical questions. Right? I have done a question as well. Then I have at a glance I have explained what are the changes to the company and what are the areas that you need to focus on your examination. Section 12, 18 and 16, 15 also, right? And 19 you have to be very careful, and 24, that means that bad debts, we have already discussed that. So and then I have explained the changes to the withholding tax on the investment income, and then I explained what are the changes to the VAT and the newly introduced with the SSCL at a glance, right? So this is the end of our discussion. So hope you all have a good knowledge and awareness about these changes and how you can pace your exam successfully. So thank you very much, and I wish you all the very best for your coming exam.